Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to take a look at the Forex market wrap. We're going to go over the news for this week and some of the charts that we watched throughout the videos this week. So, let's kind of kick it off with the news. We had a little bit of shocking data in terms of the central bank data out of the RBA, where we saw that they hiked rates less aggressively than they recently thought they would. So forecasts were showing that we were going to see a 2.85% outcome. Instead, we saw 2.6%. So that basically said that the RBA only hiked rates by 25 basis points from the 2.35%. Now, the market was expecting a higher jump basically due to the fact that the Federal Reserve had been aggressive again recently, and they expected other central banks to follow this narrative, and the RBA haven't done that. They stated that they've hiked rates quite aggressively recently and that they're going to slow the pace at which they're tightening now. So interesting numbers there from the RBA. They're actually the first central bank to slow down the rate at which they're sort of increasing, especially over this sort of recent months. The RBNZ then followed. They actually hiked by the expected or by the forecasted 50 basis points, seeing their rates move from 3% to 3.5%. Then the big news for the week then was the NFP data. So the average hourly earnings, the employment change, and the unemployment data. Now, the market was expecting lower numbers this week with 248,000 jobs to be expected. Instead, we saw 263,000 jobs created in the month of September. We, however, saw a positive note on the unemployment rate, which saw a decrease from 3.7% to 3.5%, which gave a little bit of a boost to the US dollar. Moving on to some charts of interest then. So we have the US dollar index now. This worked out pretty much to what we were talking about this week. We originally saw price in this consolidative zone, and what we talked about was if the dollar was going to continue to weaken from this 11.80 area, then we could expect price to trade down to the weekly highs and some other support. So we touched upon the 110.80 and the 110.26 as an area of interest. You can see that we have sort of support down through here as well as here. So we expected price to come down into this zone and find support, which is what happened. Today, price consolidated for the majority of the day until break into the upside. Price looking to retest the 113 handle or even 113.50 after the recent non-farm payroll announcement. Going on to euro dollar then, so we expected euro dollar to trade higher in line with the dollar weakness until that level of resistance, and you can see here price consolidated, broke out to the upside. We actually traded back to parity, which is 1, and from there sellers stepped into the market, created that lower high, and we've traded down ever since. If the dollar's going to remain strong, I'd expect price to continue to break through these lows on the way down to seeing the major level 0.96 handle in the near future. Going on to Kiwi then. So Kiwi didn't quite meet our expectations. If anything, price just ranged for the entire week. After seeing this breakout, we expected price to potentially find a lower high and continue down to the 2020 lows. Instead, price rallied and actually rejected previous structure lows, which happened to be this 1.58 handle. And you can see price came up into that level twice before reversing and pushing to the downside. Price is still yet to breach the 0.55 or 0.56 handle down through here. If it did do that, I would expect sellers to continue to push price to those expected 2020 lows. Moving on to gold then, our final chart of this video. Gold didn't play out to our expectations either. We were expecting the dollar strength to come in, but the didn't come in as soon as we thought it would. In terms of the dollar weakness, extended gold's bullish move into the key 1730 level. We did expect this to be a bit of a sticking point for gold. However, we did also highlight that price could easily break through because of the dollar weakness that was in the market, which it did. As soon as it traded above 1680 highs, which were these highs, we rallied into the 1730 handle, where we have found some slight resistance. Now, if the dollar is going to continue to remain strong and continue to gain strength, then maybe we'll see that this recent bullish run here will be short-lived. We may get another return to 1730 before price drops towards the 1622 handle. I hope you enjoyed the videos this week. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more of our Forex trading content, and I'll speak to you in the next video.